What's up, trading family? Wild card on the desk. Friday, August 21st, and the market just handed us the same bill twice. Walmart, ticker WMT, missed comps and took the whole tape with it. Walmart comp sales came in 2.6% against 3.8% expected. That's the slowest pace in 6 years. Gross profit still rose 96 basis points on tariff refunds. That's the no-win box. Strong consumer means sticky inflation and no cuts. Weak consumer means growth scare and no cuts because the inflation is supply side. Thursday was the hangover. SPY down 0.84%, small caps down 1.34%, tech down 4% on the week. The consumer isn't dead. The consumer is out of moves.
Quick reminder, nothing we say today is financial advice. We're two people talking markets, not your trade desk. Do your own research. Tape check. The VIX is down 2% into expiration. Friday, the dollar index is down 0.24%. Gold is up 1.47%. Bitcoin is up 6.68% overnight. Pre-market is basically flat, while the dollar gets sold and volatility rests. The core tension is SPY 767.50 to 768. That's the first real checkpoint.
Let's build the Walmart box because this is the follow-through from our Home Depot call Monday.
Home Depot already told us the consumer is stalled on big-ticket stuff. Walmart now shows the trade-down consumer is stalling on everyday staples.
Comps at 2.6% is not a blip. Walmart got paid to eat the tariffs, and the consumer still didn't show up.
And the no-win part is the Fed's reaction either way. A strong consumer means inflation stays too sticky for cuts. A weak consumer means a growth scare, but the doves still can't cut because the inflation is supply side.
So Walmart's worst day of the year is the market pricing in that box, not just one company's miss.
And BJ's is the sharpest angle this morning.
Take it.
BJ's Wholesale, ticker BJ, reports today. Walmart ate diesel costs in distribution. BJ's sells the diesel at the pump. Fuel inflation lifts BJ's revenue line while it squeezes the member walking through the door. Same fuel wire, opposite side. The membership model either gets sticky because people trade down to warehouse clubs, or it breaks because the trade down doesn't cover the energy bill.
So BJ's is not just another value retail print. It's the fuel wire mirror.
If BJ's guides down on the member, the global consumer crack goes live before lunch. This is not a United States story. Japan headline consumer prices printed at 1.9% this morning, the highest this year. United Kingdom consumer confidence is expected to tick down from -17 to -18. German producer prices are on deck with a year-over-year consensus of 2.7% against 1.8% prior.
4 economies paying the same oil bill. The Iran premium moved from the barrel into every checkout line on the planet.
That's the through line. Walmart was the first check that bounced. BJ's tells us whether it's a bank run or one bad account.
Now, the dollar turn. Bessent's peak deficit message. The Treasury buyback rolling the long end. And Muslim saying underlying inflation is 2.5% to 3%. The dollar index is down 0.24%. Gold and Bitcoin ripped overnight.
The overnight tape says money is leaving the dollar, not leaving markets.
That's not risk off. That's the market choosing its casualty.
We have to hold 2 reads. The mechanical plumbing from the buyback is one. The credibility issue is bigger.
Policy is being written on the fly. That old line, our currency. Your problem just got reversed.
Japan's yen is creeping stronger too. That adds to the same trade. Dollar weak, yen carry unwind risk stays on the radar. Earnings calendar has more than one name. Walmart, we already covered. BJ's is the main print this morning, but Friday's calendar also has BK, and ZKH pre-market. There are also time TBD prints from BXBL, NB, SLGL, PXS, LNI, and GITS, so we're not going to pretend the calendar is empty.
The real action is the economic calendar, and Thursday is the gauntlet.
Today, German producer prices are the no-cuts check. Month-over-month consensus, 0.5% against a prior -0.3%. Year-over-year consensus, 2.7% against 1.8% prior. Japan already printed core consumer prices at 1.8% against 1.6% prior. Headline at 1.9%, highest this year. Saturday has United Kingdom retail sales. Consensus down 0.4% month over month versus up 1.0% prior. Eurozone consumer confidence expected at -16 versus -15.9 prior. Wednesday, we get Bank of Japan core consumer prices, prior at 2.7%. German GDP quarter-over-quarter consensus, 0.2 versus 0.4 prior. United States consumer confidence consensus, 91.2 versus 90.8 prior. Thursday is the actual decision point. United States GDP consensus, 1.5% versus 2.1 prior. GDP price index consensus, 6.3% versus 3.6 prior. Core PCE price index prior at 3.3%. Core durable goods orders prior 0.7%. Durable goods orders prior 0.3%.
Watch German producer prices today. Hot confirms no cuts. Bold leaves the doves handcuffed. Thursday, GDP and core PCE is the gauntlet. That's where the tape either catches a bid or breaks. Rotation check. 1 week leaders. Energy fund. The energy sector, ETF, up 4.41%. Healthcare fund, XLV, up 2.38. Materials fund, XLB, up 0.21. 1 week laggards. Tech fund, the tech sector, down 4.02%. Industrials fund, XLI, down 3.24. Financials fund, the financial sector, down 2.25.
Money is rotating into energy, healthcare, and materials, out of tech, industrials, and financials. Energy is the only sector with pricing power right now. This is rotation, not full risk off.
My TFT algo is still holding semis and biotech, with brackets active, nothing chasing the red. My paper feelings book is all cash. 3. The energy sector, ETF. Round trips are my only winners this week. I'm not chasing a 4% weekly move.
My wave trader algo is flat. My gut account is all cash into the weekend data. Overseas, Asia was mostly green. Hang Seng up 2.02%. Korea's KOS, PI up 0.8. Shanghai Composite up 0.28. Nikkei down 0.30. Europe also green. Euro Stoxx 50 up 0.41. DAX up 0.34. London's FTSE 100 up 0.25. Dollar yen is down 0.29%. Euro dollar flat. Dollar index down 0.24.
So, Thursday was a United States story, not a global risk-off. Overseas green plus flat pre-market says nobody is panicking yet.
The checkpoint is SPY reclaim and hold 767.50 to 768 past 11 a.m. Reclaim and fade by 10 is just the price pin rolling over on expiration Friday.
Expiration. Friday means the pin owns the morning. Don't judge at the bell. Judge after 11. Portfolio, hot news. The Iran premium is back, but it's not the same oil trade from June. Energy fund. The energy sector ETF led the week, up 4.41%. Bessent is talking the toughest sanctions in history, enforced through the financial system, not a kinetic restart. The premium is not dying. It's moving from the barrel into products, gasoline, and diesel. That's the wire that hits BJ's members and Walmart distribution.
Bull case, energy is the only sector with pricing power. Imported inflation reinforces the no-cut macro, and the energy sector ETF is the direct lever.
But I'm not chasing after a 4.4% week. The sector is extended.
Here's the counter case, because we have been badly wrong on oil risk calls before. A piece or off-ramp headline would kill the premium faster than the sanctions story built it. This is not a floor. It's a premium that can disappear.
That's exactly the distinction that killed my June, the energy sector, ETF trade. War over, premium gone. Right now there's no off-ramp, but I still won't declare a floor.
Bessent talked crude down, but he's enforcing through the financial system. Secondary sanctions, coordinated isolation. The premium doesn't die. It moves from the barrel into products. Second-order effects matter more. Diesel and gasoline inflation hits distribution and members. That keeps the Walmart no-win box closed.
Portfolio reality. My TFT algo is in semis and biotech with brackets active. My paper feelings book is all cash. 3. The energy sector, ETF. Round trips are my only winners. I know that play, but a 4% week means I wait for a live tape level, not memory.
My wave trader algo is flat. My gut book is flat. The lesson from Wednesday was not to be clever. It was to decide once and hold.
Flat beats guessing. No call out from either side of the desk this morning. Here's what we're watching. 1. SPY 767.50 to 768. Reclaim and hold past 11 a.m. turns. Thursday into a shakeout.
2. German producer prices today. Hot confirms the no-cut story. Cold leaves the doves handcuffed.
3. Thursday's United States GDP. Consensus 1.5% versus 2.1 prior, plus core PCE. That's the actual decision point.
4. The energy sector ETF discipline. After a 4.41% week, we are not chasing. Wait for a live tape level.
That's the board. Trading family. Keep your size small, keep your levels honest, and don't let a green open make you forget the pin. Stay sharp out there. This is Wildcard. Gone.